What if I told you that the biggest difference between retail traders and hedge fund traders isn't money, it isn't technology, and it isn't intelligence? It's the way they think. Every day, millions of retail traders open their charts hoping to make money, but hedge fund traders open their charts with a completely different objective, and that's why their results are often completely different. Most retail traders enter the market focused on profits. They're thinking about how much they can make, how quickly they can grow an account, how soon they can become financially free. But professional traders rarely start there. They start somewhere else. They start with risk. Most retail traders enter the market thinking about profits. They're asking questions like, how much can I make today? How much can I make this week? Can I double my account this month? Their attention is focused almost entirely on reward. But hedge fund traders think differently. Before they think about profits, they think about risk. Before they ask how much they can make, they ask how much they can lose. And that single difference changes everything. Because professional traders understand a simple truth. If you protect your capital, you can always find another opportunity. But if you lose your capital, the opportunities no longer matter. That's why risk comes first, not second, not after the trade, before everything. A hedge fund trader can spend hours analyzing a position and still decide not to take it. Why? Because the risk doesn't justify the reward. Most retail traders struggle with this idea. They see an opportunity and immediately think about profits. Professionals see an opportunity and immediately think about downside. What happens if I'm wrong? How much can I lose? Does this fit within my risk limits? Can my portfolio absorb this loss? Those are the questions professionals ask themselves every day, and that's one of the reasons they survive. Because they know that trading is not about making money first. It's about staying in the game long enough for your edge to work. Many retail traders are trying to hit home runs. Hedge fund traders are trying to avoid strikeouts because they understand something that takes many traders years to learn. One reckless trade can destroy months of hard work. One emotional decision can erase weeks of progress. One failure to respect risk can damage an account beyond recovery. That's why professionals are obsessed with capital preservation, because in their world, survival comes before success, and success only becomes possible when survival is guaranteed. Another thing that separates hedge fund traders from most retail traders is that they don't chase trades. This is one of the hardest habits for many traders to break, because most people feel like they always need to be doing something. If the market is moving, they want to be involved. If a stock is rallying, they want to catch it. If a currency pair is running, they don't want to miss out. And before they know it, they're entering trades simply because the market is moving, not because the opportunity fits their plan. But hedge fund traders think differently. They understand that not every opportunity is their opportunity. Just because a market is moving doesn't mean they have to participate. Just because other traders are making money doesn't mean they need to jump in. And that's a level of patience most retail traders never develop, because retail traders often suffer from something dangerous, fear of missing out. They see a move happening without them, and suddenly they feel pressure to enter, pressure to chase, pressure to do something. But professionals understand that pressure is not a reason to trade. A valid setup is a reason to trade. That's why hedge fund traders can sit on the sidelines for long periods of time. They don't feel the need to force opportunities. They don't feel the need to constantly be in the market, because they know something many traders forget. The market will still be here tomorrow and next week and next month. Opportunities never stop coming, but capital can disappear very quickly. That's why professionals would rather miss an opportunity than force a bad one. Think about that. Most retail traders are terrified of missing profits. Hedge fund traders are terrified of taking unnecessary risks. And that difference changes everything. Because chasing trades usually lead to emotional decisions, entering too late, ignoring risk, breaking rules, forcing setups. And once that starts happening, discipline begins disappearing. But professionals remain patient. They wait, they observe, they let the market come to them. Because they understand that successful trading is not about taking more trades, it's about taking the right trades. And sometimes the most profitable decision a trader can make is doing absolutely nothing. And perhaps one of the biggest differences of all, hedge fund traders don't need to be right. Most retail traders hate being wrong. They take a loss personally. They see a losing trade as failure. So they hold losing positions longer than they should. They move stop losses. They argue with the market. And sometimes they turn a small loss into a disaster. Professionals don't think that way. If the market proves them wrong, they simply accept it. They exit, and they move on. Because they understand that trading is not about proving you're right, it's about managing risk and protecting capital. A hedge fund trader can be wrong several times in a row and remain completely calm. Why? Because they know one trade means nothing. What matters is the outcome of hundreds of trades over time. That's why they think in probabilities, not predictions. They don't need every trade to win. They only need their process to work over the long run. And that mindset gives them something most retail traders never have: freedom from ego. Because the moment you stop trying to be right, you start making much better trading decisions. That's because hedge fund traders think in probabilities. Most retail traders think in predictions. They want to know exactly where the market is going. They want certainty. They want guarantees. But professionals know that certainty doesn't exist in trading. No trader can predict every move. No strategy wins every time. No setup is guaranteed. That's why hedge fund traders don't ask, "Will this trade win?" Instead, they ask, "Does this trade give me an edge?" Because they understand that any single trade can fail. Even a great setup can lose. But if they continue taking high-quality setups over and over again, the probabilities eventually work in their favor. That's what gives them confidence. Not the belief that they'll be right, but the belief that their process works over time. While many retail traders become emotional after one loss, professionals stay focused on the bigger picture. They know that one trade means very little. It's the next 100 trades that matter. And once you start thinking in probabilities instead of predictions, trading becomes a lot less emotional and a lot more professional. This is also why hedge fund traders focus on process instead of profits. Most retail traders wake up thinking about money. How much can I make today? How much profit can I earn this week? But professionals know something important. Profits are a result, not a goal. The goal is execution, following the plan, managing risk, waiting for quality opportunities, sticking to the process even when emotions appear. Because they understand that profits cannot be controlled, but behavior can. A hedge fund trader cannot control what the market does next, but they can control whether they follow their rules. And that's where their attention stays. While many retail traders judge themselves by profits, professionals judge themselves by execution. Did I follow my process? Did I respect risk? Did I stick to my plan? Because they know that if the process is good, the profits eventually follow. And that's one of the biggest mindset shifts a trader can make. Stop chasing profits. Start mastering the process. Because in the long run, the process creates the profits. That's also why patience is such a powerful advantage for hedge fund traders. Most retail traders struggle with patience. They feel like they always need to be doing something, always looking for a trade, always looking for action. But professionals understand that patience is not wasted time. Patience is part of the strategy. They know that forcing trades usually leads to mistakes. That's why they're willing to wait, and wait, and wait, until the right opportunity appears. Because they understand that one great setup is often worth more than 10 average ones. The ability to stay patient gives them an edge that many traders never develop. And over time, that edge becomes extremely valuable. It's also why consistency matters more than big wins. Most retail traders dream about the trade that changes their life, the massive winner, the perfect setup, the huge payday. But hedge fund traders rarely think that way. They're not trying to hit home runs. They're trying to produce steady results, month after month, year after year. Because they know that one big win means very little if it's followed by a series of reckless losses. What matters is consistency, the ability to execute correctly over long periods of time, the ability to survive difficult market conditions, the ability to remain disciplined regardless of results. And that's where their mindset becomes completely different from most retail traders. Retail traders focus on outcomes. Professionals focus on process. Retail traders chase excitement. Professionals chase consistency. Retail traders think about the next trade. Professionals think about the next 100 trades. Retail traders want quick success. Professionals build long-term success. And that's why hedge fund traders often appear calmer, more patient, more disciplined, because they're playing a completely different game. They're not trying to get rich from one trade. They're trying to build a process that works for years. So remember this. The biggest difference between retail traders and hedge fund traders is not intelligence, it's not education, and it's not access to better charts. It's mindset. While most retail traders focus on profits, professionals focus on risk. While retail traders chase trades, professionals wait for them. While retail traders need to be right, professionals simply follow probabilities. While retail traders obsess over outcomes, professionals obsess over process. And that's why their results are often so different. Because successful trading isn't about predicting every move correctly, it's about making disciplined decisions consistently, day after day, month after month, year after year. The truth is, hedge fund traders lose trades, they experience drawdowns, they make mistakes, but they survive because they think differently. They stay patient when others become impatient. They stay disciplined when others become emotional. They stay focused on the long term while others chase short-term rewards. And that's the lesson. If you want to become a better trader, stop asking how much money you can make. Start asking how well you can execute your process. Because in the end, the traders who succeed are not the ones who find a secret strategy, they're the ones who develop a professional mindset. And the moment you start thinking like a professional, you start giving yourself a real chance to become one. Thanks for watching, and I'll see you in the next video.